Welcome to today's podcast, everybody. Today I am delighted to say I have one of our funding experts, so Andy from Yorvik Finance. So hello, thank you for joining us. I believe this is your first of many, I hope.
It is, yes.
So Andy is one of our funding experts, and today he is going to explore invoice finance and how it can help you avoid a cash flow crisis, which I am sure is something that every business owner is, well, we all know that every business owner is very interested in cash flow and how to get it, how to release it. So I'll hand over to you, the expert, Andy.
Thank you very much, Samantha. So I think the first thing to kind of mention is that cash flow, a lot of people have heard the term, cash is king and stuff like that. So
that always gets banded around, doesn't it?
Exactly. So, and to be fair, cliches are normally cliches because they're true. So a stat that some people may be aware of, some not, 80% of businesses that fail in the first 24 months or 2 years of trading fail because of cash flow challenges. Okay. So that can be a typical situation is, you've done work, but you've invoiced, but you don't get paid for 30 to 60 days. If your client or debtor pays on time, but in the meantime, you will have your own overheads to cover, your own staff to pay, potentially, things like that. So cash flow is something which is imperative to any business, and it's important that you can manage that correctly. Essentially, what we have as a whole of market brokerage at Yorvik Business Finance, we cover all sorts of kind of funding, so business loans, asset finance, invoice finance, merchant cash advance. There's a whole list of various options that we have. So today we'd like to focus on invoice finance because that is one of the ways that is best to manage your cash flow and make sure that obviously you've got regular cash coming into the business to cover your overheads, pay your staff, pay your VAT, things like that.
Okay.
Invoice finance 10 to 15 years ago had quite a bad reputation. It is a completely... Say that again, sorry.
Why did it have a bad reputation?
Mainly because there weren't as many alternative lenders that now provide it. You were limited to the banks. As we know from some of the banks, or a lot of customers may have encountered themselves, the service isn't great. But also the banks, being the financial powerhouses that they are, would very much insist on things like factoring. And we'll come on to the different types of invoice finance in a moment. But essentially, they would want you to fund all of your invoices. They were very unflexible or inflexible. They would outline an offer and say, right, you have to put everything through us, so that they could maximize the fees that they could charge. But from a business owner's perspective, it will give you very limited kind of flexibility.
Okay.
Those days are now gone, fortunately. And there are a whole list of different lenders. We work with approximately 60 invoice finance lenders on their own, just invoice finance.
Okay.
And within invoice finance, you as a business owner now have full flexibility. So what I tend to do when we're talking about various products is use real life experiences or real clients that we've got without obviously naming any names. So factoring, there are three different types of invoice finance predominantly. Factoring, discounting, and then something called spot factoring or single invoicing. And without going into the molecular detail, factoring is where you will generally, fund all of your invoices that you have. So, for example, we've recently helped a care provider client with a factoring facility. They had a number of, they provide care. They have a care contract they've won with NHS, local residential homes, and kind of care providers. They are on 30 to 60 day payment terms with... Yeah.
So, as a business owner, is it your responsibility to set your payment terms for your invoices, or is it normally in a contract,
Yeah,
or?
yeah, it'll be in a contract. So you are certainly involved in it as the business owner, the person providing the service. However, what you typically find is the larger the debtor or the client that you're providing the service for,
Mhm.
the less flexible they will be on what payment terms they agree with you. So
Okay.
things like the NHS generally are minimum of 30 to 60 days.
Okay.
We've had clients before that have provided services to supermarkets, huge multi-billion pound organizations. And sometimes the debtor, you could say, right, can we do 14-day payment terms? Sometimes the debtor will turn around, and the bigger they are, the more they'll be unflexible. Some of them will say, we do 60-day payment terms. If you don't like it, we'll use someone else.
Okay.
So in answer to your question, yes, you are involved in the negotiation, but if you're a new business or if you're a smaller business, you don't obviously have such a sway,
Yeah.
shall we say. So coming back to factoring, that's where you would put all of your invoices through. We've got this care provider that had the NHS, who I think from memory were doing 45-day payment terms. You have to remember as a business owner, this is assuming that the debtors pay to term.
What does that mean?
They pay on time.
Okay.
Over this stat is probably about 18 months old now, but it's still quite useful. When I was doing some research for a networking group that I was in a couple of years ago, over 60% of invoices in the UK are paid late, business to business invoices. So over half.
And for invoice financing, it does have to be B2B, doesn't it? It's not B2C.
Correct. Yeah, there's other solutions that we will come on to in another podcast that we'll do, I'm sure, about the B2C options. But yes, invoice filing has to be business to business.
Okay.
So going back to factoring, we've got this care provider. They had 45-day payment terms with the NHS. However, they had to pay their staff weekly. If they
Okay.
didn't pay their staff, inevitably their staff would leave.
Mm-hmm.
They'd get a bad reputation as a business. Oh, so and so didn't pay me on time, So with the business, it was a startup company as well, this care provider. They didn't have any capital to pay their stuff. So the challenge is, well, how do I pay my staff? I know I'm going to get paid in 45 days' time, but how do I pay them weekly? That's where invoice finance comes in.
Okay.
So going back to factoring, that's where all of the invoices are done. The lender will provide funding against those invoices. And we're talking more generically now about invoice finance, but the way it works is the lender will provide an advance, anything generally from 60 to 95% is industry specific, but normally if you're non-construction, you're looking at anything between 80 and 90% as an advance. So for example, on a £10,000 invoice for this care provider, they would receive anything between 8,000 and 9,500 within one day, sometimes same day.
Okay.
Therefore, they get the bulk of the advance of the invoice. They don't have to wait the 45 days. They can pay their staff weekly. They can cover their own costs and so on and so forth. With factoring, and this is the key difference that we'll come on to now, with factoring, the lender will do the credit control for you.
Okay.
So if you are a small business that doesn't quite have the time or resources to make sure that the invoices have been received, deal with any disputes, carry on chasing the debtor to make sure that it is going to be paid on the date it's due. If you're a small business, you may not have that resource, so you may be happy for the lender to do it.
Okay.
On the flip side, because obviously we're we don't have any ties with specific lenders, our job as a commercial finance brokerage at Yorvik is to make sure you get the best deal for you as the business owner. Some business owners don't like to release the control of credit control, i.e. chasing the debt, making sure it's paid on time, to the lender.
Okay.
That's one of the things, going back to what we talked about 10, 15 years ago, where invoice finance had a bad reputation because the banks were very aggressive.
Okay.
If the debtor didn't pay the invoices on time, Because from the lender's perspective, they've given an advance to the business owner. They need that money back. If they didn't, they were very aggressive.
Okay.
Those days are gone now. So credit control teams with lenders are very understanding. You know, they work with the debtors, they work with the client because they want to keep their client happy. But if you're happy to give the lender the credit control responsibility, factoring is the best option for you.
Okay.
Which leads quite nicely on to discounting. Because discounting is like factoring, where you will put ideally all of the invoices through, but you as the business owner remain in control of the credit control.
Okay.
That way, you have the responsibility of making sure the debt is paid on time. You've already had the advance. Obviously, the lender will need those funds. But if you've got long-standing relationships with clients, or maybe some clients that are a bit more sensitive and you're concerned that, oh, hang on, this client needs to be treated in this way, and that's the way we get them to pay on time, then discounting is probably going to be the best option for you if you want to retain control of that. And then the final option is called spot factoring. It's also called single invoice financing. And we've had a client come through actually yesterday for this, which we've already helped. The client they are a glass kind of manufacturer and installation company, and they've got some decent sized kind of invoices, one for £8,000 and a smaller one for £1,000. Now they're both on 30-day payment terms, but the client has a couple of unexpected bills to pay, so they can't really afford to wait a month before getting that 9-10 grand in.
Okay.
However, they don't want to. Most of their clients pay on 7-day terms, so usually they don't need the facility because they can wait a week. That's fine, and their clients pay on time as well. We were approached by the client, so we were tagged by a good friend of mine on LinkedIn.
Power of LinkedIn.
Yeah, exactly. Absolutely love it. So James Lee, who's a friend of mine that I've met in the networking group, he saw a post, tagged me in it, said that I could help. I've spoken to the client yesterday, sent me the invoices this morning. I've already sent it on to the lender. We know that the limits and everything, so the lender can help.
Okay.
The client will receive funds either today or tomorrow. And for the 9,000 total, they're going to get 8.5.
Wow. And do all lenders offer these 3 facilities, or no?
No. So just before we get onto that, so going back to the spot factoring, that is where you don't have to put. There's no minimum amount of invoices that you have to put through. The other added benefits with most of the single invoicing or spot factoring lenders, there's no contract, there's no personal guarantees required.
Okay.
And that is a big benefit. So, for example, let's say that you ran, I don't know, an MOT garage, and you decided that you wanted spot factoring, but you only wanted to fund invoices on a Tuesday for blue cars. You could do that. I've got some clients that use it once a year. They have one big job a year. It's on 60 days. They can't wait that long. I don't want to wait that long. They fund that one invoice. That's it. Okay.
Yeah, that all makes sense.
Yeah. So coming back to what you then asked is, do the lenders provide all of these? No. Top of my head, I don't think that any provide all 3.
Okay.
What you'll typically find is there are some specialist lenders that only do the spot factoring or the single invoicing.
Okay.
That's their kind of bag. They know that they're not going to get regular stuff all the time. It's an as and when, you know. The spot factoring, because of that element, tends to be the more expensive of the options.
Yeah.
But if you're a business owner watching this now, or you're interested in the rough costs, work on the basis of 4 or 5% of your invoice value for a single invoicing. So £1,000, it'll cost you 50 quid.
Okay.
10 grand, it'll cost you 500 quid.
Okay.
The rest is yours.
Okay.
Coming on to factoring then, where the lender does the credit control, and discounting, you do the credit control. Most lenders will offer both. There are some that only offer one or the other, but most of them will offer both.
Okay. Okay. So there potentially is an invoice finance facility for all businesses. It's just finding the right one. And that's why they need to speak to somebody like you and not go direct to a lender, because if they go direct to a lender, they could miss out on the spot factoring single invoice.
Could be, yeah.
Yeah.
So coming back to your point, all businesses, as long as it's business to business invoices,
yeah.
If you are, again, I'll use a care provider as an example because it's a nice comparison. If you're a care provider, but you only deal with individuals directly, you're going into their house and you can't get funding for that.
Okay.
But there are other options that we'll talk about on another podcast. But yeah, it's the benefit of speaking to us or any broker that's good. They'll ask questions about your business. You know, what kind of payment terms do you have on your invoices? You know, how many debtors do you have? Because again, without going into too much molecular detail, some lenders have restrictions on what's called concentration. In plain English, what that means is if you've only got one client, one debtor, and that's what all of your income comes from, there are some invoice finance lenders that won't lend against that. Or if they do, they will limit the advance they give you. So that 80 to 90% we talked about, 95%, that will drop right down.
Okay.
So the benefit of using a commercial finance broker like Yorvik is that by speaking to the business owner and getting an understanding of their business and their invoicing processes and stuff like that, or alternatively, if the business is in a specific sector or industry, so construction invoice finance is so different to mainstream invoice finance because of the stage payments, because of the way it's done. Essentially, by speaking to a broker, you are going to get access to, firstly, many lenders that you won't have heard of. Secondly, you're going to be able to get indicative costs from a number of lenders in one go because we do the lending for you. And thirdly, we will know which lenders are the best in terms of service. So when it comes to cost, and this is imperative, Sam, on invoice finance, obviously the pounds and pence does make a difference. Talked about spot factoring earlier, roughly 4 or 5%. You're looking at discounting and then factoring, and it goes in order of cost that way. So spot factoring, most expensive, discounting, middle, factoring, where the lender does the credit control, is the cheapest.
Yeah.
You're generally looking for factoring and discounting anything between 1.8 and 2.5%, 3%.
Okay.
So again, £1,000 invoice, anything between 18 quid and 25 quid. 10 grand, 100 grand invoice, 1,800 quid to 2.5 grand.
Okay.
So yeah, the benefit is that, the key bit is service. So generally speaking, and I'll give you another real life example. We had a startup recruitment company come to us recently, one of my contacts down in London. We went to a number of lenders. The difference between the most expensive and the cheapest in terms of the costs on a £10,000 invoice, the difference was 80 quid.
Okay.
However, the key thing with invoice finance, you need to have a lender that if something goes wrong and the debtor doesn't pay, or there's an issue with concentration or anything like, you need to have a lender that will look after you. Now, see, all the lenders that we work with are good, but we have, for example, there's 2 or 3 lenders that we've already got 30, 40 clients with. They've been with that lender for years. We've touched wood. We've never had, as a brokerage, a client want to change invoice finance provider.
Okay, that's good.
We get it right first time. We tie the lender up, but we get the best lender for that particular client.
Yeah, and that's the beauty of using a broker as well, isn't it? Because you can partner the right lender to that client. Okay, exactly. Well, I obviously found that very informative because I've written lots of notes. So I'm sure other business owners have. So that's just you scraping the surface, isn't it, with Invoice Finance? So if you want to know more, you can find Andy on the Director's Choice platform under the funding area of the platform, or find an expert. He has his very own landing page there. He's very active on LinkedIn. So you can contact him either way. And by what you've just said, I feel like there's some other podcasts that are going to be coming around B2C invoice finance products, around business loans, around asset finance, and around MCAs. So I look forward to those. So thank you very much. And we'll see you for the next one soon.
Definitely. Lovely speaking with you again.
Thank you. Bye.